Hi friends, what's that little thing on the chart, you might be asking? Well, it is KNC, which stands for Know Your Coin. No, it doesn't. It stands for Kyber Network Coin, I think. And I've been asked to take a look at this recently quite a bit. In fact, not just KNC BTC, but I suppose KNC USD. I can't read what's behind my recording icon up there, but that's going to go with the top one off the list. What is it? Coinbase, okay. And KNC versus ETH was what people were talking about. Again, I can't read what's behind it. I'll just go for the top one. We've got Binance for that. So here we have enough information on here to populate Bollinger Bands and moving averages and all sort. Over here, the dollar prices, no, we don't have really anything there. And we don't have anything on the Bitcoin one. But so we'll start off here with a weekly view of this coin. So first off, it's impossible to tell about things like divergences and whatnot when there's so little price action on such a nascent asset as to have had nothing happen in its history ever yet. So in terms of the weekly time frame so far, right? So we're not going to be able to learn anything starting off in the weekly and going down the time frames, other than just simply say that we have highs, a low, but then a higher low, and then a higher high. What we're looking at here, just in general, we have an uptrend, okay? So the starting price of this thing was down there at a whole bunch of zeros and a 5, and now we're at a whole bunch of zeros and a 1, doubling that price action, actually tripling it up to the 16,574 area. So they've had a really good percentage increase in price there. If we look at this and take it all the way up to where we are, we're looking at over 200% increase in price. Lovely jubbly. But we need to go down the time frames to make any sort of discovery. Starting off here in the 2-day time frame, you can see in terms of the Bollinger Bands then anyway that we're certainly up at the high area of this. If we were to move on beyond this area, there'd be a pretty damn good chance of the prices at least coming back down to where they are now. But indeed, they could retrace from where they are now back into the zone of the bands themselves. If we do continue this 2-day upward trend. So I'm going to continue looking down the time frames, but what have we got? Well, we have a bearishly divergent aspect to this here on the oscillators across the board there. So of course, you could also expect a bit of a turnaround here. Sure, that's not what everybody who is a fan of Know Your Coin wants to have happened so far with Kyber Network, but that's the picture in general on that coin at this point just now. What could we be looking to? Well, just higher lows, for instance, perhaps in here, the 0.0011935 and whatnot. Let's do it this way and take a look at the dollar coin pairing then and the Ethereum one, so we can make sort of a similar assessments as we move down the time frames across all of them. Same situation in terms of divergence, same situation in terms of the having come up here in and around about the top end of the Bollinger Band. And so we've got a bearishly divergent high on the go here. We could be looking down then to the sort of 1 and one area where you've got the 21 EMA and our previous low, which of course is a 48% drop down in price, a 40% drop down in price. So that would be fairly significant. But you could be, a 30% one. Okay, sorry, I got my maths a bit wrong, but coming in from the top end to 35, whatever, a significant drop down in price, so if that were the case, then that would be sketchy. So where instead could we look to on this one versus US dollar, just as for sort of a higher low or, and whatnot, then we can look towards this area where we had a couple of tops in there, a little bit of a twin peak, little drop off there afterwards, and this area where we have the previous highs. So looking at this, if we go down below this area, then of course we could be looking down towards sort of this area, but in the meantime, we don't need to get too carried away thinking about any of that. Let's just see how things go with regards to just the price action. If we trace this towards the upside then and things start going parabolic, that'll be one thing. It's not really operated like that so far, despite the fact that it's been a very, very good coin. Let's look over to the Ethereum one. Same situation, bearish, looking at the where the prices could go to then, whether there's this wasn't quite so twin peaky, but you could maybe have made some sort of argument that you might have been looking at the time for head and shoulders, since this could be like a shoulder aspect, and what we've done is failed that pattern and moved towards the top side very spectacularly, but we've done it with bearish price action on the bearish divergence, putting a couple of lines here sideways on this mofo, looking towards these two areas really in general. This one's maybe a bit low, and saying, this is what we'd want to see. If the prices did come into this area and set in another low here, given that this does look like it would be coming in for a local high, then, that'd be quite dodgy. You want to see it, ultimately close above this line, but this is kind of what we're looking to. Those two numbers add up to around 56 and 50. 50 to 56 area in terms of the 0.000s with the Ethereums. What are these tiny little numbers called in terms of Ethereum? Let me know. Ethereum bobs, maybe. Right, so yeah, let's rinse and repeat. Let's go down to the 24-hour time frame. Way outside of this area at the minute, but will this trace towards the upside and create a parabolic upward trend as we saw here? Of course, I would expect potential in terms of the ranges for this thing to come back in and retouch off these areas, which might mean that you could even come in here and have a bullishly parabolic trend, which does actually come back down towards this 15.5 area, 0.00015 area again. If I was looking towards this, so I could put in a little sort of thing here just as a general idea, but also this is decent, and that's just me kind of making an assessment of where the Bollinger Band would really be. If this does trace back into this area again and looking towards our previous highs, there's another area where we can look to in terms of the movements of the price action, and then if not, then let's see where the last low was. So this is a low here, if you want to call it the local low. Then we'd want to see the prices above that. And of course, we have the 21 EMA, the 20 simple moving average coming in between those two areas. This red line in the middle is the 20 moving average, by the way, which you would know from Bollinger Band, Bollinger Bands. Anyway, so yes, that's what we could be looking to. Would I be bullish on this, in general or whatever? Well, we have the bearish divergence again here. Do we have it on the stochastics? Actually, there's a chance that we end up without it on the stochastics. Of course, this line up here is still down here, still miles away, and this anchor point on this will be on the previous closes. So this could very much turn into bearish divergence, before our very eyes. It's bearishly divergent set up on the RSI and the DMI. But of course, that's only under the assumption that this is a local high. If it continues towards the upside, it's not a local high, so we wouldn't call it that. And let's do the same thing again here, right? So this is obviously going to drag on a bit if I do this in such detail and explain things all the way along the way. So instead of doing that, I'm just going to kind of draw the lines in. And you can see as I draw these lines in, over on the left-hand side of your screen here, it shows you the numbers that they're actually referring to anyway. No, it doesn't. That's a lie. Yes, it does. It's not a lie. It's just because it's an angle, I guess, or whatever. No, I'm being thick. I don't know. But why is that? Okay, yeah, so as I draw them in, you can see it. So as they're selected, you can see them on the left. So that's 120. Nice. So they'll call that 130 actually, because it's sloping down the way I wanted to have it on 130 instead. And this one here, we'll call it, whatever that works out as, 110 or something like that. And the 21 EMA comes in at about, 116 or so. The divergence, same dealio as well, by the way. This anticipating where potentially if this were to just go on a parabolic uptrend, perhaps, which looking back here, when this started happening, it wasn't divergent, and but this is currently. But if this were to continue to happen and this were to slope towards the top side, then I suppose then 140 would be where I'd put in that where I'd sort of say this is where you could see really extremely bullish re-entry points for not financial advisor, not financial advice. If you were believing in that upward trend, I wouldn't. The Ethereum one, right? Same deal, but look to the left as I draw these on for what number it pans out to be, because I'm not going to read them all out. You can see it there. I'm sure you can. And then in terms of this part of this equation here, looking towards that area, so you can see that 63, 65 at the minute, highly achievable target. That's probably too high, in fact, in a lot of senses, really. Overall, let me show me the Bollinger Eye. So the more like here at 61, then after whatever 56 or whatever that was, I can't remember now. And then this is your previous low area in this just general zone here. So we'll call it 50, shall we, or 49 or something like that in terms of this thing. The 21 EMA coming in at 50 and the 20 simple coming in at 52. This is where you could see the prices retrace to fairly standardly, simply. By the way, I'm going to do a Fibonacci retracement in here in a minute or two. That's just gone down as far as the 24-hour. I'm going to skip a couple and go down to the 4-hour time frame then, and just sort of revisit now that we've got the lines drawn in here and see if there's anything different. Itchy face. That's not a bearishly divergent high on this time frame compared to the previous high here, which was a bearishly divergent high as it happens compared to its previous one. So you can see the high here and then the lower high in the RSI despite putting in higher price action. What's happened is we've gone on up to the top side. Good reminder to people that divergence is just simply a warning, which is why we are talking about decent enough size if it were to continue going up in terms of, re-entries. Again, though, I wouldn't be basing anything off that. This is diverge. This is not bullish, not bearishly divergent, and that's good as well. So this was just the oscillators having a chance to reset in amongst this area when we had the sort of volatility driving the prices up to there, I suppose, off the back of the squeeze here, and the ADX coming down towards 20, but not quite underneath it. Yeah, I did dip down below 20, then sort of got jolted towards the top side. Well, actually, overall, the strength of trend was dying off, and it was just going sideways during this period. This didn't turn out to be a head and shoulders event, though, either, as we saw this parabolic action, which has maybe come in as a result of breaking up above this line here about the 56,000 Satoshi's level, if that's what that is. I think it is. So yeah, what about that? Then what about working back up the way? That was against Ethereum. Is there a different story here? No, it's the same story. Yeah, same story, bearish and all the rest of it. If you compare it against the previous one to whatever, same story there. Bitcoin, same story. Yeah, Bitcoin, the same story as well. Bit more spreading out on the oscillators down below. Their RSI. Well, no, actually, no. Not like disregard what I just previously said. There was a sort of hidden bullish divergence aspect coming in here with this previous area as well, which I didn't really point out at the time. You could have said, perhaps potentially, is that even accurate? Let's just skip on past that because it doesn't really matter, and it's kind of covered up by the price action with these lines. I can't tell if they're body closes or just wicks. Right, cool. All that's done there. Let's go back up to the 24-hour time frame and stick a Fibonacci on here. Now, well, no, not the 24, the weekly, because what we want to have is a couple of them. Well, I have two, right? We're going to do an all-time highs, which is where we started off at, all the way down to the lows, which I think are going to be in about here. Right, we'll not be super exact about how we put this on, and then we can see how we've done in terms of 618. We've come in here and actually achieved higher than the golden pocket. But if we did retrace down towards that 57,000 area from being up at 65, at least you could understand that there's this area of the golden pocket just in there. Let's instead draw this in body to body to have another sort of look at it. Just it's marginal at the bottom. I'm going to leave that there, and you can see that we've come up to the 786 right now, which is a common enough retrace point as well for the price action. Having struggled for a couple of days for a couple of weeks at the 618 and didn't actually get rejected far enough down to recreate a valid Fibonacci towards the downside, and instead moved on up towards the top side, having come in at the 786. I'm liking it better body to body. I'll do that across the board with these then here. Let's take a look at this, and of course this, well, we don't have. We can look at it in terms of extensions, go from this previous high down to the low here. This is against the USD prices, and how far have we come up? Well, we came up towards the 618 and then came back down again towards the 1618, that is, back down towards the 100%, zero retrace there. And then we've come back up again above this 1618. That's all very, very good looking. Instead of this, maybe we want to have to use the actual Fibonacci extensions tool. I hardly ever use this thing, but where are you? Trend-based Fib extension tool. Go down to the lows here, and then up to our highs instead, and zoom on in. And take a look at where the 236 is coming in at on this one, which is ultimately what I would have ended up having to do really anyway in terms of the looking at the potential downs for this one. So so this is kind of handy. It's nice to have a scenario where I would actually really want to use it as well. 236 comes in at 144. Moving down below 144 opens up the valid possibility and the very much achievable possibility of getting these three green targets here below. Moving on beyond that area is somewhat unlikely. As you can see, that's where the previous low is as well. So of course, while we could come into the 786, like I say, common retrace point, that could be where it turns around at, and you'd be looking for a higher low to come in there. At the worst case scenario, I suppose 110, or else you're looking at a macro picture trend turnaround price. Of course, the 618 then is 120, the 0.5 is 130, let's call it, and the 382 is at 135 or 36, let's call it there. I know the numbers are slightly different, but I'm kind of rounding up for brevity. Moving on then to the Bitcoin pairing. And of course, as we can see here, this has also had its upward trend. Now, in terms of this one, what we can do here, just to mix things up a little bit, is to draw in from the lows there. I'm actually using this low here, line here, up towards the previous highs, and just simply speculate off the back of where the 236 would be coming in at. And then what I'll do is I'll draw in a Fibonacci retracement tool extensions so that you can see it from the other sort of scenario, the other way around, and then you'll be able to compare that back to the way I just did the previous two and learn a lesson from it. The 236 comes in at 142, 44, moving then 3 downward side targets. If this were to be a local high and we were to move down below 142.44, you could realistically then look down to 1250 and 11094 in terms of the 0000, all those numbers, whatever that is, 11,000, the sort of what we're talking here, 14,000, 12,000, and 11,000 satoshis. Then, of course, the 618 comes in at 9,681. So go down below that 10,000 Satoshi level, and you're actually putting in a lower low over here compared to the previous low, but a higher low compared to this area down the way. And this you could consider to be flux on the way up towards actually doing a macro picture movement, just in the same way that this was flux and this was flux here. So that's what you'd be looking towards. And yeah, we said we'd do a little quick comparison. So just shoving those off to the side, keeping it lined up, but shoving it off to the side a little bit. I thought then, of course, then looking down here and drawing in the high on the wick there down to the ultimate low, which came in here at this area. Where's the 1618? Well, look at that. It lines up perfectly with the 236. The 127, which is green because it's more important. I always do the green ones as being more important. Lines up with the 382. Not surprised. 100% retrace lines up with the 0.5, and of course the 786. Like if we need to spread this out a bit, the 786 and the 618 are straddling the 618 here, putting the 618 in at where the golden pocket for where this would be at if I were to just to stick on a 0.615 or just no 65 on there and go okay, then bring it off, and then pow, look at that, it lines up perfectly. There's a bit of a lesson for people in what I'm doing here. Now if I just stick that do I stick off to the side or do I keep it on here? No, I'll just delete it and we'll take a look at the Fibo extendos. So this is the sort of stuff that you don't see anywhere else. I hope you like this episode. I do daily technical analysis. My name is Rocky Outcrop. I really appreciate you tuning in. If you stuck through to this point in the episode, then I highly recommend you hit that subscribe button for more daily technical analysis. I do videos every single day for Bitcoin, Chainlink, Tesos, and Ethereum, and I do bonus coins all the time. The last bonus coin I did was VET, and the one before that was Zilliqa. Both of them well sort of critically acclaimed episodes. You can take a look at them as well. Let me know in the comments down below if you want this to become a more regular feature. But of course, let's just do what I want to do here and then wrap up. I really do appreciate you tuning in. So using the Fibonacci Extensions tool then and going up the way, and I haven't annoyed myself by having not got the price action on screen, so I can't do it properly, and then sticking up here and lining up, then what do we see in terms of how this all shapes up and what we're looking at? So while the 236 comes in here at this point, and you can see obviously on a downward retracement aspect from the all-time lows to all-time highs or whatever that was, basically the starting the opening price or whatever, all-time lows to all-time highs, right? Then you're looking at down towards the 236 and talking about how you could have a decent, if you were to, in a valid Fibonacci, if you were to go below the 236 here at 14,244, what do you have on the way there? Well, the shallowest retrace in terms of the extensions brings you down to the 15,800 level, and of course the 382 comes in here at 15,323, the 0.5 at 14,656, and the 618 in here at 14,000. So this area where we have in between here where the 236 and 618 is, if you didn't see a turnaround in and around this zone, then you very much could expect to have other things occur. For instance, an extension, a retrace all the way back down to what is the 0 line or the 1 line here on this particular Fibonacci at 100% or whatever, which comes in around about where the 382 would be. And then moving on down the way, the 1618 comes in at the 618 golden pocket zone here. So you can see how all that ties together. I hope that's a really interesting episode for you, using primarily the longer time frames because we're not doing this coin every single day, but just to give people a nice broad perspective on things. I hope you liked and followed along with the episode well enough and took some sort of value from it as well. I think there's a lot of value there. For me personally, I would have probably have appreciated this if I was just watching YouTube sort of a decade ago before I started trading or whatever, and I was interested in an asset, and I saw a video like this from somebody, then I think it would be pretty decent. So that's kind of the how I've decided to structure this one today for everyone. So hope you like your know your coin. Hope you all feel like you know your coin a little bit better. That was, of course, KNC, the Kyber network coin versus Bitcoin, USD, and Ethereum. Looking at all the different price points there, where we could see retracements coming in at. I'm sure there are some people who want to see all three on the price at once. So if you stuck all the way through here and you thought, oh, that was the perfect episode, but you didn't put all of them on there at once, I wonder how they all lined up there together, because whatever, then let's just take a look at that. And where does it come in at? Well, if you were to go on past this here, past the 6-1, if the prices were to retrace back down to the 1618, haven't come up to as high as they are up here. In fact, this is so far up beyond that price action. Let me just qualify this real quick and bring this down a bit again here and say that this, of course, is, a very nascent asset, and this isn't necessarily how this would always work out, because, this has just only got 1, 2, 3 points really to compare it to on this time frame in its entire life. So just as a little disclaimer there, but anyway, at the minute, where you'd be seeing in terms of crucial price points, again, the 1618 area, and here at the 13,828. So you could just round that to 14,000 and kind of think about the 14,000 area, between the sort of 14,300 or so down to the 14,000 area, and indeed just below it at 13,800, as being super important should the prices actually come down as far as that, in terms of, opening up the possibility for slinking on down the way. And then certain areas kind of do line up, like the 172, it's green is more important, blah blah blah. It lines up with our with the 100% here, and is quite close to the 382 over there on that one. And of course the 100% area here lines up with the 50%. And what do we see here with the 618? Well, that's got this confluence in around this area of the 618, the 1618, and the 6 and the golden pocket, with this confluence of things in here. I hope you're finding that kind of interesting, and all the rest of it, because that's a complete breakdown of this on the big time frames. And of course, if you go down towards the lower time frames and you want to do something similar, then you're more than welcome to looking at different areas and in terms of how this is all working out. But let's see, round up by just finishing off and saying, let's see if this continues to trace this towards the upside, or if now that we're back inside this, if we move towards the median line, we've got our targets towards the downside, should we actually find support at the very top end of this, which of course is where we've seen the prices coming down to so far, but where we could anticipate realistically where we could find the prices coming in at tomorrow, which is of course the 382 over here on this particular Fibonacci retracement, and up above the 236 on this one, coming down towards the 236, lines up with our horizontal line there, which we drew on before we had the Fibonacci's. It's no coincidence these things have worked out that way. And then where we find here is that this line is kind of significant all in around this bunchy part. I kind of chose this point fairly arbitrarily, but of course you can see that the zone here where we had the trading at was obviously quite important. Now that's great. Looking at this in terms of the divergences as well and whatnot, reminder to people that there is a touch of that there on the RSI and the DMI, but the stochastics is still an open question at the minute, as you see the divergence that exists currently between the two lines on here, which is of course laid out like this. The K and the D is the yellow and the pink. Thank you so much for tuning in. I've been Rocky Outcrop. Make these episodes every day. Really appreciate it if you choose to subscribe and join me on this run up to 1,000, because right now we're in around that 900 area. So every person who subscribes is 1% closer to 1,000 subscribers, and that is amazing. Catch you later.